So another document on your table is actually your guys' audit. So we're going to talk specifically about your audit. So the audit. So most communities look at the audit as it's something the government tells me I have to do. So PA2 of 1968, the Uniform Budgeting and Accounting Act, requires all local governments to do an audit. It requires local governments with a population of less than 4,000 to do that audit every other year, which is what you guys do. Now, again, that every other year, just to clarify, means that if
we have started doing it annually now, so.
Perfect. Then I won't talk about it. Yeah. So where I was going to go is the best practice is you need to do it every single year. Now, why? Well, we talked about those numbers and the data. If you're doing it every other year, then you can't monitor yourself because you haven't had somebody verify your audited financial information is correct. The other thing is that it tends not to be that much more expensive because the auditor still has to go back and audit the other year that you didn't do. So there tends not to be a humongous differential between doing 1 year and doing 2 years. So what are some of the things that you should be doing to prepare for your audit? One is an open line of communication. It's a lot easier to talk to your auditor the middle of the year about what you should be doing and how you should be doing things than it is to wait to the end of the year and then figure out that you may have done them wrong or should have done it a little bit differently. Most auditors are absolutely phenomenal at helping their communities. You give them a call, they just help you as part of their engagement contract. So use them as a resource. Ask for your PDC list, which is prepared by client. This is a list of information that the auditor normally asks you for. And so your audit is due 6 months after your fiscal year. Well, don't wait until 3 months after your fiscal year and your auditor is coming in 2 weeks. Ask for that a month before your end of the fiscal year so that you can start preparing and gathering that information. And that includes keeping your existing information up to date. They're going to want to see copies of bank recs. They're going to want to see payroll documentation. They're going to see government body approval on things like your budget, your accounts payable, budget adjustments, all those things we've talked about. So make sure that you have those records, you kept them up to date, they're filed, so when the auditor, nowadays, a lot of the auditors do everything remotely, and so you upload it to a program like SureLink, and so you want to make sure that you have all that stuff in a file and organized. When they ask for it, you send it off, and it's a non-stressful thing you have to do. If you had audit findings from last year, review those, make sure that you're making progress on addressing those, so you don't have repeat findings. And then also talk about your internal controls. These are the safety systems that you have in place to make sure that you're preventing fraud and misuse of township resources. And so that's why we do bank recs and have 2 different people review those. When we talk about payroll, we have 1 or 2 people sign off on the payroll. All those things are your internal controls to prevent risk and fraud. So make sure you review those internal controls. So what is the purpose of an audit? So there's lots of purposes of it. One is financial integrity. It ensures that your financial statements are presented accurately and completely. And it verifies your accounting records are in line with accepted accounting principles. And that they ultimately represent your financial position, again, fairly and completely. We'll talk more about that in a little bit. Ensures you're in compliance with state laws. So, for example, we talked about the state chart of accounts. You have to be in compliance with that. If you have a bond, there's certain bond requirements. The ARPA money, there's certain federal requirements. And so the audit helps ensure that our local governments are in compliance with some of those outside regulatory items. It's one of the things that we think about an audit on is fraud prevention, that's the purpose of an audit. It's not. It's one of the byproducts. So we have to be very clear that the audit is not the primary purpose is to find fraud, but the auditors do limited testing, and that limited testing may identify issues that need to be looked into a little bit more depth. Audit can help with public trust by increasing transparency and accountability. It allows citizens and stakeholders to have confidence that their financial statements are presented fairly. We talked a little bit about this, but risk management identifies areas of local government might be at risk. So those are identifying some of those internal controls that you might need to improve and enhance to to ensure that you're limiting risk. You can never completely eliminate risk, but our goal is to try to limit as much as we can. It can help with informing decision making. It goes back to figuring out your financial position in your audit. Well, you've got a bunch of resources and information there, and if you understand that, then it can help you make better decisions potentially. For example, you get a bond. Well, when does your bond expire? Your audit will tell you that. But if you don't know that, you can't figure out maybe how to have other projects. And we enhance our internal control. So there's lots of importance of that. So again, the audit is not something you simply do because the state said that you should do it. The audit, this document here, is your document. This is not the state's document. This is not the auditor's document. And I'll be honest with you, when I first read this, I kind of thought it was the auditor's document. They put it all together, they gave it to me, they told me to review it. It's the auditor's. It's not. This is your document, and we'll talk about that in the letter that we're going to review at the beginning. But this is your statements, this is your information. All they're doing is evaluating it. So again, we've talked about this before, but as an elected official, you have a fiduciary responsibility to read and understand the financial position of your community and understand this document. So how do you find the document? If you want to get it, you want to look at old ones, etc. State of Michigan, this is the department that I used to run. You can go there, type your community name in, and then on the next screen, you can say, I want to see just audited financial statements, and then you can download all kinds of other information that you may present, but you can also download and review your current or past audits. So now we're going to go to the actual document. So pages 1 and 2 of the document, these are the only pages that are the auditors. Right? I said everything else in this audit is your information, is your data. You put it together, you're responsible for it. These first 2 pages are the auditor's information. So the purpose of this is the auditor has responsibility to issue an opinion on your financial statements. And there's 4 different types of opinions that you can have. The reality is everybody gets unmodified. It's very, very, very rare to see any of these other ones. And the reason of that is because the auditors usually don't issue the financial statements if they can't get to an unmodified opinion. But an unmodified opinion basically just means that your financial statements are true and a fair view of your financial position. Doesn't mean it's exact, but it means that there's enough that you can make a decision out of it. So if you think about this, if you guys were a business and somebody wanted to come in and buy you guys so that you could all retire and move to some warm climate or something, you want to sell the township, the financial statements, they're independently audited, which means that if I was looking at this to determine if this business was a good value or not, I would be able to look at this and I can rely that the data that you say, because the data is yours, is correct. That you're not lying, you're not hiding anything, you're not being sneaky about anything. And so the auditor is basically, that's what the purpose of the audit. So if we look at this, if we look at the first paragraph, and hopefully you can see it's highlighted there, the second paragraph, the first thing we say, in our opinion, the financial statements referred to above are presented fairly. We said that's what we do, is we present these, that these are fairly presented, that you can get a reasonable deduction from that. The next paragraph, the auditor is required to be independent. What does that mean? Well, your auditor can't be your bookkeeper. So your auditor can't be coming in and making journal entries and making adjustments and actually doing your finances, because if they are, how can they give a fair representation if they're the one that's doing the work? Now, this is the number one problem that our small local units government have, and that is, one, most of our small local governments are not accountants. They're not trained professionals. Two, we don't have enough staff, so a lot of times we don't have enough depth to be able to do all the things that we do. And three, this stuff is complex. It's difficult to know. I'm not an accountant. I'm not a CPA. I work for a CPA. I'm not an accountant. So I might have to rely on somebody that knows some of these required accounting things. And so if your auditor is doing some material adjustments to your financial statements, they're not independent, and if they're not independent, they shouldn't be doing your audit. So, in that case, you have one of two choices. Either you have to increase the knowledge, skills, and abilities of the people doing your books, or you need to find a separate firm that then helps you do those other transactions. So, so try to make sure that your auditor is truly being independent. And if they get beyond that, again, they can't do their audit. The fourth paragraph, goes back to management is responsible. And these are your numbers. It's making it very clear that you guys are responsible for putting those numbers together, which again, it goes back to that they're independent. And then the last paragraph, what their objective is to obtain a reasonable assurance about whether the financial statements are free from material misstatements. Again, going back to the position of somebody buying your company, we say it's valued at $1 million. Well, if it's valued at $1,025,000, it's probably still material, right? So that's what we're saying. It's good enough that we can rely on the information. It's not very far off. Then we go to the next page, the second paragraph. So this is on page 2. The purpose. It's expressing opinion on the effect of internal control. So in other words, I talked about internal controls and fraud. This is making it very clear here that the purpose of this is to look at the numbers to say they're fairly stated. The purpose is not to say that your internal controls, these are your policies and your procedures are in place that limit risk. They're not putting an opinion on it. Again, they test that, and they may discover things, but this is not the purpose of the financial statements. And then the last paragraph, again, our audit was conducted for the purpose of forming opinions. So again, this whole page is just to reassure everybody that their job is to review the information that we're presenting. So that's the purpose of the auditor's report. So the next pages 3 through 9, this is the MD&A, Management Discussion and Analysis. So in the MD&A, and I have in the back, the last couple pages of this document, list all the things that are required to be in the MD&A. I'm not going to go through all those. The important thing to think about the MD&A is that the purpose of this is to give you context to all the numbers that are to follow. So just like when we talked about the budget, a bunch of numbers is difficult to look at and understand anything. So the MD&A is supposed to provide context and additional information that explains the kind of the why behind those numbers. Now, I'll be honest with you, and this is not a criticism because this is consistent with most MD&As I look at. Your guys is extremely weak. Again, not a criticism. It's something that we're missing an opportunity to take advantage of. And so when we look at the MD&A, and if you look at so for example, if we look at page 6 of the MD&A, one of the things that all we're seeing in this MD&A is, frankly, regurgitating the numbers that are later in the document. But what we should be doing is explaining the numbers so that if I'm a lay person, I can look at these and I can understand why there was a change. So I've highlighted 3 examples. There's some numbers that change, and they're big numbers. Why did those change on page 6? And I have those on some of the other pages on here as well. So another thing, for example, on your audit is that while your audit is looking back in the past, this section allows you to do other things as well. So it allows you to talk about things in the future. So if you had, if you know something big is changing, like, hey, our millage is expiring and we're going to have to renew it in the next fiscal year, and we don't know if it's going to get renewed. I mean, those are some of the things that you can put in here to add more context to not only what your numbers say now, but what are some of the things that might be impacting you. So again, the MD&A is supposed to enhance your understanding of the numbers. It's supposed to help you interpret and analyze the numbers. It's supposed to help you evaluate your financial condition, and it also can be forward-looking. So as you think about this in the future, and I think you guys are a new auditor, right? Mm-hmm. So what happens, and I was the same way. The first year I did an audit, my auditor came in and says, Rod, look at the MD&A. I actually just got an email from a community I'm working with that we're doing audit prep for them. They just sent it today. Sent the MD&A. We're supposed to review and look at it. The first 2 or 3 years, I didn't do anything with it. I said, oh, that's fine, it's whatever. And I didn't realize I was missing a complete opportunity to, again, provide another tool, just like our budget, to help explain, educate, and frankly cover for you guys. We're going back to comment about public comment and what you do. But if you've been explaining something in your budget for the last 5 years, and then something later ends up happening that you knew that was going to happen, and people say, well, I didn't know anything about this. Well, if you explain that, you know, that we have a structural problem, blah, blah, and whatever that situation is, this is why we do it. You basically have cover for the work you're doing. So work with your new auditor to try to not miss an opportunity with this schedule. I'll stop there, see if there's any. Yeah, it's a missed opportunity. And one thing I recommend later in the MD&A is I recommend you probably put together a committee, 2 or 3 of the board members, maybe some of the public, whatever you guys want to do from that public input perspective, and then review your MD&A when your auditor gives it to you, and then add whatever needs to be added to it. Now your auditor should help you too, because the first time you do it, it confuses me. I've been doing this a long time. But work with your auditor and have them and push them to make sure that that first draft they give you provides some of that, because they don't want to do that, right? No offense to the auditor, if a company does audit, everyone wants to do the minimum, because everything they do above the minimum, they lose money on. So they're going to try to do the minimum they possibly can, but you need to push them to make sure that you're working with them to enhance that document. Yes, sir.
When you say ours is weak, the auditor's MDA was weak.
Well, it's your MD&A. It's yours, so yours is weak. Your auditor provided it to you, and then you guys accepted it. And again, this is not a criticism at all of the audit or anything else. I would say that 80% of audits in the state of Michigan, I'm just making that number up, I have no idea, are just like this. Now, one thing to keep in mind is GASB 103, I don't know what the number is coming out, and it's going to require changes to the MD&A, and it's going to require, it's trying to strengthen this analysis component. So it's coming. You might start doing it better now, if you will, so that when the changes come, you'll already be on the path to making improvements to that.
So when we discuss the MDA, should our auditor be there as well?
So,
because if we don't really know how to read this, and you want us to make suggestions, kind of need somebody there to say, well, that has nothing to do with that. You know, you're over here, we should be here, and then we can.
So a couple things. One is that document that I included at the back of it. If you look at that document, it helps explain what should be in the MD&A. So you can read that and kind of understand what your expectations are. But I would absolutely say, to your point, is that even me, I don't know if I have the ability to review your MD&A if you guys contact me personally. Now, my audit partners in the firm, absolutely. But me personally, I don't think I have the ability to do exactly what you're saying. Taking, reading this and looking at it and making the changes myself. So what would I do? Well, I would do a couple things. One, I talk to my auditor. They're my resource. You say, look, this doesn't look like it's analysis. There's no analysis anywhere in this document. Can you help me with that? Most auditors are going to, like, absolutely, let's help, they can walk you through, and they can give you suggestions. So your document, but they can give you suggestions. If they're not willing to, then the other option would be to contract with some other auditing firm, right? You could contract, a firm like us, you could contract, there's lots of different firms out there. You could contract with them and say, hey, for this first year, because it's no different than hiring an outsourced accountant, right? I can't do bank recs, so I'm going to outsource that to somebody else. That's perfectly fine, because then they're still doing that on your guys' behalf. So that would be the second option. And then the third option would be, maybe look at other communities. You can look at every audit in the state of Michigan. You can look at other communities, and again, you can steal what other communities have included in the MD&A. The biggest thing is to think about that is that even if you don't understand specifics of what it means, it's really thinking about, even if I don't understand, it's why? Why is it, what is this number? So when we talk about page 6, it says, the largest source of revenue is property taxes. That's a pretty easy one because it's obvious. You don't really need to explain that because you can look at that there. Now I do notice there's a difference. So that number says 471, 455, but if you look at the numbers below, that number doesn't match up anywhere. So why is there a difference there? There might be a reason. Maybe there's something else reported property tax. I don't know. Most likely, if we look back at like last year's audit, it's probably a number from a previous year and I forgot to update it. But that's an example of just looking at this and saying, okay, there's some changes on here. Why are they? When we got ARPA, you would have, when you recorded your ARPA, this will be a good example. When you guys spend your ARPA money, you're going to have a big increase in revenues related to state or federal grants. It's going to be on there. You should explain that, which is, state grants or federal grants increased because of recording of ARPA revenues related, blah, blah, blah. 2 or 3 sentences, right? So, yeah. It's not easy. That's why, again, that's why I suggest a committee too. Because if you have 2 or 3 people look at it, you're maybe more likely to decipher it and learn it and add to it, and then rely on outside help. So, good question. Is there anything else? All right. Okay. So, page 10 and 11 are government-wide financial statements. This does not matter to you guys. But for most local governments, we go all the way back to the beginning, and I had those different types of accounts. And I had governmental funds, and I had proprietary funds, enterprise funds. And I mentioned that there's a different basis of accounting. What that means is that these funds have different accounting rules of how you record revenues and expenditures and how you record data in your financial statements. And because you have different types of funds, the purpose of these 2 sections is to say, well, I'm going to take these different funds, I'm going to take the governmental funds, and I'm going to take the proprietary funds, and I'm going to record them on the same basis of accounting. And so normally what you'd see here, and I've written it in, is you'd see 2 columns. You'd have government activities, and you'd have business-type activities. You guys don't have any of those, but again, normally this would be taking these governmental activities that doesn't normally record things like depreciation, because you don't, as a basis of accounting, you don't understand the specifics, but you don't treat depreciation and those types of funds when you're doing these. But if you want to do a fair comparison of your financial statements, you got to convert everything to the same basis of accounting, so you're comparing things differently. For you guys, frankly, these pages don't matter at all to you, because you don't have different types of funds. Everything's in the same type of thing. So the good news is you can ignore those. Now, page 11, I will highlight. This is kind of useful because it's it looks at your expenses that you have for services, and then how much revenue you come in to cover those services. And what you can see is in that last column, everything's negative, which means that you don't raise enough money to pay for the services that you provide. Well, why is that? Well, because government does not, it doesn't exist to make money, right? For your government, it exists to provide services, and so you don't get enough revenue, for example, from the fire department or from public from public safety, you don't get enough revenue. Every time you go out and save somebody's house from burning down, somebody doesn't write you a big check and say, okay, that cost us $15,000 for this run, you got to pay us, right? You pay for that by taxes. So the numbers below, so where I have non-program revenue, that's actually where you get your revenues to cover those expenses. So that's why they don't match up. I don't know why we provide these financial statements, frankly, because they don't match up. But some accountant somewhere wrote a Gansky statement, said that's really, really important. All right, so pages 12 through 17, these are really your financial statements. And so when I talk about fairly and accurately presenting your financial statements, these are it, right? These are our numbers that we're talking about. This tends to be one of the first places that I turn when I look at the financial statements. So if you see a number in the top left-hand corner, when it's like this page is number 2, Next page is number 1. These are just the pages, if you think about it, that I turn to first when I look at financial statements. Because they tell me a lot about the local government. So the first one, well, I'm going to talk about page 12 and page 14 kind of together. So 12 and 14 basically looks at the same information, but from 2 different perspectives. So the first one on page 12 is your balance sheet. So this is your assets and your liabilities. This is your cash and how much money that you owe people. And then page 14 looks at it from a revenues and expenditures perspective. So they tell you different things, and they're very important to look at independently, but that's why we have these 2 different ones. And when we look at them, one thing that you'll notice is that we have 4 different funds listed. These are called your major funds, and the reason they're your major funds is because they tend to be the largest in terms of revenues and expenditures, so they get special placement. And then we have non-major funds. This is all the tiny little funds that you might have, and you don't need to account for all the little ones, so they just roll those up together. And we'll see the non-major ones have these same sections, but they put them in the back. So if you want to look at what makes up the non-major, we look all the way in the back of it, but we won't get there yet. We'll talk at the end. But when we look at the government funds, the first thing we look at is cash. How much money do you have? I talked about cash and investments. So I can look at this and say you have $1 million in cash and you have $674,000 in investments. Well, I look at some communities and it'll be all cash and 0 investments. So you guys at least have some money invested. But could you invest more? Right? It becomes another revenue source if you can get more interest. Something to think about. The fund balances are an important one. When we've already talked about fund balances, remember, now we see our different types of fund balances. We have non-spendable. These are our prepays. Which the only one we have is in our major government. Then we have restricted, and you'll notice that all of the funds that are special revenue funds, all their fund balance is restricted because you can only spend that money on what the primary purpose is for. So even if your fire millage, as an example, or your road millage does not get renewed, you're still gonna have a fund balance in there, and you can only spend that on roads. You can't all of a sudden say, well, I'm just gonna put that in the general fund and I'm gonna spend it whenever I want. So that's why it's restricted. And then you have assigned and you have committed. So assigned, again, if it was me, I would just pick one. I wouldn't use 2 because they're very, very, very similar to each other. And because you don't have a manager or anything, it's easier, frankly, to just have the board do everything assigned. That's my opinion on it. And then everything else is unassigned. Now, one thing I didn't say when we talk about fund balance is that a lot of times you'll hear unrestricted fund balance. And so when we talk about those measurements early on that we talked about, we talk about that in terms of unrestricted fund balance. And the reason we use that term is because unrestricted fund balance is the combination of your unassigned, because that's money that you get to spend and do whatever you want, plus your committed and assigned. So if you guys want to do something, you can take all 3 of those together, add those together, and that's the money you have available to spend on something that you want to spend on. You can't spend non-spendable because it's already been spent. You can't spend restricted on special things. So that's that term, unrestricted fund balance. If we look at page 13, we won't talk about that, but when we talked about those first statements that combine the different bases of accounting into one consistent format, this explains the math behind that. I've never looked at that page and done anything with that page in my life. Page 14, though, this is our revenues and expenditure. This is the one I go to first, right? Because it's easy for me to understand. Well, my revenues and what are my expenditures on page 14. And then one of the things I'll look here and say, okay, how are we doing? Was there anything that was over in terms of, so if we look at that non-major, we have $779 that we have that our expenditures were higher than our revenues. So may or may not be an issue. I don't know until I dig into it. But that's what I look at here, because this is a good way to understand where your money is coming in and where your money is going out. Other thing to look at is other financing uses. Any transfers you do from one fund to another fund gets recorded here. And you want to make sure you understand why you're transferring money out of one fund into another fund. a lot of times communities will get themselves in trouble. They have a structural deficit in one fund, and so to bail the other fund out, they'll transfer money from one fund to the other fund because they have a structural deficit problem. They don't fix their structural problem. If you're transferring money out, perfectly fine. You should. There's many reasons you do that. But if you're doing it to plug a hole, you should just know that and understand why. So again, these 12 and 14 are probably the two single most important. Page 15, again, is another example of.
We don't have page 15 and 16.
No? Good enough, right?
Stuff together.
Ah. All right. So the good news is, which page do you have for?
15 and 16.
You don't need to look at those anyways. So 15 again is again taking that and combining it with that standardized format, which we don't need to look at. Page 16, this looks at your tax account. And what you'll notice on here is your assets are zero and your liabilities are zero in your tax account. Why is that? Well, because at the end of the year, you take tax money in for other jurisdictions, including yourselves, and you disperse all that money out. At the end of the year, most of the time, most communities have zero. So that's why it's 0, 0. Now, some communities do keep a little bit of buffer in there, but it's perfectly fine. So I don't look, again, that's another example of pages that I don't look at. Okay, so again, those were your financial statements. So now we have the notes to your financial statement. So this is page 18 to 25. And 18 to 25 are very similar to our MD&A, which provides context and clarification. Because you can't just look at the numbers and know something. So for example, if I talk about debt, which you guys don't have in the other section, and I have a number that says I pay $100,000 in debt, I have no context there. What's the debt for? How long is the debt? How much is the principal? How much is the interest? And so this section provides support and clarity to the other information that's in your financial statements. We talked about basis of accounting. You know, it talks about so if I'm looking at this, I understand the accounting principles that are being used. For the most part, this is a great section. I think everybody should read it. But it is a little bit more in depth, right? There's probably not a lot that you're going to glean out of here and come like, I understand things a lot better. But there's a few things. So for example, I mean, that's one I talked about, which you guys don't have, which is a big one. Page 23, I mean, this is a good one. This might be one to talk with somebody about Michigan class, and that's more of an expert investments, but that last sentence, you have $1.4 million that has risk. And that's because if we put money into a bank, what's the FDIC insurance now?
$250,000, but that's all been changed in the last year since this audit's been done. I've moved it for both more money and no risk.
I love it. So that's a perfect example, right? You look at this, critical eye, say, Madam Treasurer, why do we have $1.4 million?
That's what I asked when I started.
Yeah, you know, and then
And I
say, well,
changed it.
I don't know. Yeah, so we have limited, so you can, you know, FDIC insurance, a lot of communities use 2 or 3 banks, right? Because each bank account is separate. So those are the things. I'm not going to really go into much more detail on this because a lot of this, you know, foreign currency risk, you know, that's enough. Now, if you go to pages 26 through 29, this is another area I look at. And the reason I look at this is because this is your actual budgeted revenues, budget expenditures, and what you actually ended up with. So this is a great tool when you can look at this and you can say, how well did we do? And if you have any expenditures that are over, that your expenditures are higher than you budgeted, well then that's a finding. I want to look at that, I want to identify it, and I want to know this. And so this is available in each of those major funds. So I go to this section again just to measure, first of all, if I have any deficit spending, and if I do, why. The other thing I look at here is, we talked about budgeting early on, and we talked about budgeting. The goal of the budget is at the beginning of year, your budget that you estimate, at the end of the year, should be pretty close. So if I think I'm gonna spend $100,000 at the end of the year, I hope that I spend $100,000. Now, there's gonna be an error, right? Maybe I spent 110, maybe I spent 90. It should be close. And you might have one year with something completely blew up you didn't expect. There's no way anybody could have known, and it was $250,000. That's fine. But if year after year, in this case, we look at you budgeted using $60,000, but your actual was you used $125,000. Added to your fund balance, 125, right? So the difference is $190,000, which is over 50% of your revenues, right? So again, this is a one-off, so I can't tell if this is bad or anything, but I could go on the state's website, download the last 2 or 3 years, and if you are consistently way off in terms of what you expect your revenues and your budgets to be, then there's an opportunity to do a better job of budgeting for your revenues and expenditures so you're more accurate. Why do I want to be more accurate? Well, how can you make decisions if you don't know how you should spend your money and how much money you have available? So for example, if I tend to over budget, which is meaning that I want to be really conservative on my expenditures, I want to make sure that I never, ever, ever, ever go over. So I think it's going to be 3%, but I'm going to put 10% in this account. This one, I think it's going to be 1%, I'm going to put 6% in this account. Because I want to be conservative, right? That's perfectly fine. Well, what's the problem with that? Well, the problem with that is that then that means that you're leaving money on the table that you could spend on other priorities, but because you over budgeted for these types of things, you don't show that you have enough money available, and thus now you can't make as good decisions on how to spend the limited public dollars that you have available and spend it on other priorities. So look at that, do some analysis. Now, in future years, GASB's changing on this one as well, and they're requiring the auditors to offer an opinion on this section, just like because right now these things don't have an opinion from the auditor's perspective, it's just informational, but eventually they're gonna have to offer opinions on these types of things. So we can see the same thing on page 27, and I didn't really look at anything beyond that. But that's just an example of try to be as accurate as you can on your revenues and expenditures. Make sense? Okay, so page 30, I mentioned before that page 30 and 31, that we have non-major funds. So non-major funds are all of our small funds that we have. And these are the same 2 statements that were in the front. One is your assets and your liabilities, and then the other one is your revenues and expenditures for those smaller funds. We're going to talk about the ones I have highlighted on when we get into the budget. Questions? Is everybody going to randomly pull up a local government's audits and now start reading them, and then calling the local governments and harassing them for their? I hope not. All right. One thing that you might have, just so you know, is the auditor will sometimes issue a report on your internal controls. Again, that's not the purpose of an audit for internal controls, but they may issue. If you have issues, you're going to have a new auditor. The new auditor, I will bet you 9 out of 10 times, the new auditor is going to find 2 or 3 things that they're going to issue internal control findings on. That's not a bad thing. It's a good thing, right? Because if they do issue things, I want to know if there's things I can be doing a little bit better, and then I want to work on those and improve those. So there's no problem. There's different. I'm not going to talk about the differences, but there's different types of internal control findings. Now, if it's material, that's something that needs to be a top priority versus a deficiency, etc. But again, most new auditors tend to identify and find things that weren't being looked at before. So that's okay. All right, budget. So we have the last document is your guys' budget. So this is gonna be pretty high level, but there are some things I want to get into and talk a little bit more depth. So where do you spend money? This is an example when I talk about your budget. Put together this graph and include that in your guys' budget. Right? What a way better way to look at how your guys' money is being spent than it is to try to filter through and look at that information. I'm gonna go back to the audit and say one more thing. When your auditor comes in, do you guys have the auditor present the audit to the board?
No, we haven't.
That's a big pet peeve of mine. When I was staying in Michigan, we had, I had auditors that worked for me. So the state, we had 3 auditors that would go out and do local units audits. When I came, that's the first thing I said is that I want the auditor, because this is your document, and the auditor should be presenting that to you at a board meeting. A lot of, it's just a big pet peeve of mine. You should be doing that. So insist upon it.
Most of them, when I recently went to a treasurer's meeting, and a lot of the people around us, their auditors always come and they make themselves available for questions to the public too.
There's 2 things your auditors should be doing. One is before you issue your financial, the final version of it, they should sit down with whoever your core committee is, so you should be clerk, treasurer, and supervisor at least, and say, because these are your documents, and they present the financial documents, and you guys should be reviewing those and looking at those. Because that number, for example, that I found that was different, their auditors make mistakes. And they're your documents, so you need to look at them, and you need to understand them. Again, I spent 5 years meeting with my auditor, having him explain things to me so that I could be more proficient in it. And so what better way to do that than to meet with the auditor and have him explain stuff so you can be. So that's the first thing is again, meet with them, having to review, and then again, having them show up. We went through COVID, a lot of people stopped doing it. And a lot of people, again, think of the audit as, I got to pay for it, I do it, I get it, I file it, I send it to the state, and they never make it a priority. So that's another reason why, because it changes that perspective of this is your document. Okay, budget. So for most communities in the state of Michigan, your largest source of revenue is taxes. Okay? Most local governments, that's how you're funded. You're funded by your taxes, your property taxes, state of Michigan. And taxes are based upon 2 things, right? They're based upon your taxable values, based upon your guys' millage rate. You're a general law township. As a general law township, you're restricted to 1 mill. You can't raise any more than 1 mill. Unless you do special millages. So you do 3 special millages that you guys have. So that's the only way that you guys can, and this is, again, just the general fund. But in your guys' case, you actually receive the most amount of money from state revenue sharing. What's state revenue sharing? Well, state revenue sharing is literally the state sharing money that they get with you guys. Now, there's 2 pots of state revenue sharing. There's statutory, which is an amount that is appropriated by the legislature. Every single year, they get to decide what that pot's going to be, which you guys don't get. You're too small. A lot of our small local governments don't get statutory, so you don't have to worry about it. So all your statutory revenue sharing, all your revenue sharing comes from constitutional. Constitutional is sales tax. So this, I look at this and then I say, I know something about you guys that you guys maybe not think about. Is that if most of your money comes from here, what happens when sales tax goes down? The revenues go down. Now, through COVID, state receipts on sales tax have been through the roof. Now, every single year, twice a year, the state holds a, what do they call it? I'm blanking. A revenue consensus meeting. That's a meeting between the House, the Senate, and the governor. They all have economists. And those economists meet and they say, what do we think is going to happen in the next year? And they project out the impacts because they have to do that to plan the budget. That's something you guys should pay attention to, right? Because if their state economists are thinking that that sales tax are going to be going up, it's going to change your budgetary decisions versus if they think sales tax is going to be going down. So again, you get a percentage of sales tax based upon your population. You'll notice if you look back, you can go to the state's website and you can see what money you got historically. You'll notice that in 2012, when you get your census, you'll see a bump to revenue sharing. But the reason you saw a bump was they adjusted your population. It took them 2 years because the federal government didn't get the census done in time. So finally, the state, once they adopted that, because this is based on population, your population increased, they had to update your number. So when you go back and we're looking at your revenue sharing, you're looking at trends, if you don't understand that there's a reason for a blip, you might say, oh, my next year is going to be higher than there was the previous year, so that's just an example. So understanding your revenue sharing, other sources of revenue, interest, sounds like we'll be doing hopefully a little bit better on that. Administration fee, that's the 1%, so you put 1%, I assume you put full 1%, you can put less than that, but that because you are assessing for all other taxing authorities, and you're sending out tax bills and collecting taxes and distributing taxes, the only way that you can get paid for that, on doing this for the state of Michigan, for the schools, for the county, is by adding an admin fee. So that's what your admin fee in there. LCSA, Local Community Stabilization Authority, state of Michigan changed personal property taxes. So you used to get more money from personal property taxes. They took a lot of that away, but they give you a separate payment associated with that. Charges for services, this is like reimbursements, land divisions, miscellaneous is rent. Miscellaneous is rent and reimbursement, charges for services like land division, cemetery sales, anything that you would sell for. Any questions on that? Okay, expenses. So this is your expenditures by each of your departments that you have. Your largest one is governing body. Now, I look at that and say, well, okay, that's no big deal. I looked at it, I did this presentation last week, didn't think anything about it today. When I was prepping for this, I looked at it and said, well, but if I look at that, you have capital outlay of $33,000. So that's a one-time expenditure. So if you would take that out, that certainly would have bring you down quite a bit in more line in that. So again, this is looking at data at one point in time, but this is a good way to see how you guys are spending your money and resources. Elections, I'm going to assume that that's probably up this year as well because you have 2 elections, right? 3, yeah. So you have 3 elections, so it's a lot more expensive than it is normally. So we got to think about those slides. Okay, accounts. You guys have a lot of accounts. I'm going to talk about this on the next slide on the details. So this is the same accounts on both sides. This is just different data. This is your beginning fund balances. Going into it, that's based upon what's in your guys' budget. So I just pulled that exact information out so you can kind of see how much money you have in these different accounts. So your fire fund, we got 410. Another fire equipment one's 311,000, etc. And then these are the revenues that are coming in for these accounts. Now, when I talk about this on the next slide, but I want to look at a couple of these accounts and we'll look at these revenues that we have that are pretty relatively small. And then we'll talk about ARPA as well. That's another side. So these are my recommendations. Number 1, you have a ton of funds. When it comes to account numbers and when it comes to funds, the rule is have as few as you can that you need to be able to make good management decisions. So more is not better. So for example, if I talk about accounts, I could create an account for my gas bill, my electric bill, my trash bill, I forget, whatever else, all your different utility bills. And I can have an account and I can keep track of each of those, which would be great if that helped me with any type of management decision, right? But it probably doesn't, because utilities are going to be utilities. If you want to do a detailed analysis, you can pull those bills. So most of the time you put one account, you put utilities and all of those things. So the same thing comes to combining these funds. The more funds that you have, the more potential accounting you have to do, because if you look back at those transfers as an example, because these funds don't have enough revenue by themselves, in essence what you do is transfer money out of the general fund into those other funds to make a balance. Versus if you just kept in the general fund, it's just one less thing you got to do. The other thing is it makes it more confusing, because when we talk about your fund balances, how much money you guys have, well, you can't look at one number because now you got to add all these other things up. The other reason why we should look at some of these funds is that legally you probably can't have them separate, because these are all special revenue funds, and to be a special revenue fund, it has to be a specific criteria, which is the revenues are restricted for a particular purpose. And I take that back. Cemetery funds is not a special revenue fund, but all of these other ones are special revenue funds. So your Parks and Recreation Fund, I don't know why it was created, what the source of revenues are, And maybe when it was originally created, it needed to be created that way, but now, you don't have any restricted revenues that are coming into an account, which means it's not special. Not that parks aren't special, and recreation's not special, but the account doesn't need to be special. Planning and zoning, that one sometimes, is separated because you want, it tends to be more on the building side, because for building permits, the state construction code requires you to have the fees that you're charging cover the expenses of providing that service. So in other words, you can't make money. You can't charge more for building permits. You can charge less. You can fund it with other things, but you can't charge more. And so you keep it in a separate fund, because then that way I can account for it and make sure that I'm in compliance. You guys don't do that, so it doesn't matter. But planning and zoning, you can keep it separate because you want to know, you got land divisions or whatever, special use permits, rezonings, etc. But there's no sense for it. Everybody puts this in the general fund. I don't really know the benefit for that. I have no idea what that one's for. I have no idea what that one's for. But, go ahead.
Okay, water suppression,
Yes.
that's fire department use, they come in, they fill their tanker up and go do it. Can that be put in with the fire department fund, or does it, would it be best in the 101 account?
So when you say, explain to me more about the expenses.
There's no expenses. When somebody comes in and gets a building permit or land division, a portion of that fee they pay, we put into the water suppression account with the idea that if we ever need to get a new well, or we wanna put an additional well somewhere in the community, this is how our fire chief explained it to me, that money would be used for that purpose. So it's money that we are ourselves setting aside for something our fire chief wants. Does that make sense? For the future.
The purpose of it is, when we send a fire engine out, it has to.
Get water for someplace. It's tanker, you guys don't have public water.
Right.
You need to go to a place and fill that up quickly to provide.
Exactly.
But so it's in case something ever happens to our current well, we had a special well done for that purpose. So it's in case something happens to that, or if we wanna put a second well in, for ease, and on the other, if they need to refill on the other side of the township.
And that was why it was given that number, was separate from that, is how they accounted for it.
Does that cover underground tanks that you put in remote areas? And you have water in there in case you need to have it, you don't have to go that far?
I think that the idea was to put in another well somewhere for that
Not a
purpose, so
well,
they didn't have to come back and
But
get
not
water.
just a tank? No,
I don't know what he wanted
some areas
exactly.
have tanks.
Yeah.
Yeah.
So, I don't know the answer. I would have to think about it more in depth. I'm gonna answer on the fly, which is always dangerous to do, right? So I could be wrong in my analysis. I would wanna go back and I'd probably talk to our auditors. And I certainly can do that. But my gut says, that's a cost of providing fire service.
That's what I say too.
So if it's a cost of providing fire service, it should be in the fire fund, plain and simple.
Well,
That's
so yes and no, because
true.
Okay?
my feelings are we have an equipment and we have, the fire operating,
Yeah.
right? So if they need a second well, that should come out of that fund.
Equipment.
That money out of their millage, and that money should stay in this special, is that what you're saying? It's
That's what I'm
general
saying.
fund?
Now,
Oh, okay.
whether it's
Got
fire
it.
operating or fire equipment, then I think we could delve in that deeper.
Right.
Because I think there'd be logic to
Right.
both of those, right? Because the purpose of fire, I would say operation because it's part of operational cost of putting out a fire. But you could also make an argument that it should be equipment because, the equipment has the access to wells has a direct size on the, size of the tanker you need.
Right.
Right? If you have less water, you might need two tanker trucks versus one if you have quick access to fire. So you could charge it to equipment. I think both are fine, but in all these types of things, it's a matter of documenting the logic.
Right.
And as long as you document the logic, then you're probably gonna be okay. Assuming the logic's not flawed. But, yeah, so, yeah, I would say that, again, this is an off-the-cuff comment, but
Yeah.
that should be, in one of the two fire funds. Which one, I don't know. What's the special events fund?
It's for, we're considering just rolling it in with Parks and Rec, because it's kind of like the recreation side of Parks and Rec.
Which then I would say,
They do like the community
you're rolling
events.
both in the general fund. Because your general fund is supposed to cover the normal operations of providing services to the public. And so parks and recs and special events are normal costs of providing services to the public, and they should be then in the general fund. I'm sorry, I didn't ask beforehand in terms of this is your meeting.
Oh, no, absolutely.
you're fine.
They can ask questions.
I'm getting half fun.
Yeah.
So, Fire Association Fund, Parks and Recreation, special events funds, some of those are used as fundraisers.
So let's hold off on this one.
Yeah, but part of the recreation,
Still,
it's,
it still be general fund, because you can take donations into the general fund, and,
can you?
oh yeah, absolutely.
You can take donations, but you can't fundraise. There's a fine line of difference, right? That's what you can't specifically say you're fundraising. That's what MTA told us.
But I would go with MTA says. But it wouldn't matter where you stuck it in a fund,
No, that's
So-
right.
yeah, but, that's interesting, because,
You can make a whole list and you can put on your website, this is what you explained at the conference. But you cannot specifically, because townships, government cannot fundraise,
that makes sense.
right? So,
Good, yeah.
okay, so back, one more question on the water suppression. So when you're saying that we should lump that in, and I agree, into the general fund, when we collect that money in a building fund, should we put that money, is that what you're saying, in with the fire millages? Can we put that there? Can we,
Oh, that's a good question.
or
So then-
do we have to keep it in the general fund, and then if they need money, we can give it to them later?
Cause we put it right into water suppression, we divide it, right?
If this go to the
Right.
fire department, it goes
Into the
into a
water
special
suppression.
fund, into the water suppression
Yeah.
fund. Because that wasn't something that, I mean, that was something fairly new from my understanding. I don't know when that was started, that was even done.
That
So-
was, yeah, it was started when we did the permits a few years back.
One of the advantages of putting in so one of the things in all these monies, so let me answer this in a roundabout way. So, and I want to come back to cemeteries, because cemetery, we have talked about that's different. But for all these funds, keep in mind, if you still as a board want to keep track of money committed and assigned, right, we've already talked about. So there's no reason why you can't merge these two in, for example, and then in your assigned, in your fund balance, say, Parks and Recreation. You can change whatever you want anytime you want, so you can put $100,000 in there and then say, I'm not gonna spend money on Parks and Recs because I hate Parks and Recs now. But you can do that. Now, if you put this money in the fire funds, either one of the fire funds, keep in mind, it's restricted now. So by definition,
Right, okay, so you wouldn't wanna do that.
so maybe,
No, you wouldn't really,
Maybe you would, because the fire suppression, or the water suppression system is restricted to use by the fire department.
is it?
Yeah,
because if you,
they're the only ones that can access it.
Oh, I'm just asking, like, you
Yeah.
can't turn it on for public
They only, no,
water day,
no,
you know,
no,
or whatever.
what happens for the public water day they used to do down at the horse farm is the fire truck would fill up from there and they would take it down there, but the horse people donated money.
Well, I think that because that reason, when you're putting it in there, then you're locking it into what you can spend on it. We leave it in the general fund, we can make a decision if we wanna help them do that in the future, or if there's an emergency comes up where we wanna spend it
and
on.
then a caveat to that would be, and I've never heard somebody adding a commit, so I want to think about that more too, in terms of the legality of that. But you could make an argument that if I'm being charged a permit and saying 5% of this permit fee is to be used for future fire suppression, then it's not being restricted from the outside, you're restricting it from the inside.
Interesting point.
Because,
But we're making money off of people buying a permit then, and we're not supposed to be, so is it legal?
Well,
Well,
you're not,
it's,
You're making money to save,
Yeah.
and so
but
you,
you can save money for
for if
specific
they're
purposes.
fire, you know, it's,
not necessarily
in
making.
case their
money.
fire
No,
house burns
You're
down.
not
I
making money, I
understand
think
that.
that's clear, you're not making money is.
We don't take
Well,
any
at
more
some
than what
point-
we pay to
Well,
do that.
not necessarily, because at some point, if we keep stocking money in there, and we have money in Michigan class for them, and we have money,
Yeah.
besides, like, that fund balance is probably pretty large between the two, what's the cost of a well? So if we have more money in those funds than it costs to dig a new well, unless we're gonna start putting them all over the county, then
So-
we made money, right?
So this is my problem with that fee. That's a different one. My problem with that fee is that when you look at fees, the purpose of fees, so there's two different things governments can do, right? You can have taxes. Taxes are voted on by the public, and taxes have a certain connotation to them. And then you can have fees. These are the only two ways that you can really waste money. And you can have fees, and fees are intended only to cover the cost of providing service. So when I go back to building permits as an example, you have to do a calculation. I just did this for a community, I did a fee schedule for them. And I looked at all the revenues, expenses historically, and I came out and said, okay, this is what your fees for all these different types of services that you provide, these are what they have to be. Because again, you can't make money on fees, because fees have to cover the cost of providing service. So and this goes back into the Bolt case, and the Bolt case was with the city of Lansing. And if you are, there's 3 criteria, I'm not gonna remember the 3 criteria, but basically when setting fees, your fees have to cover the cost of providing services, they have to be not arbitrary, and they have to be a third thing. And if any of those things are not true, then by definition they're a tax. And if it's a tax, it has to be approved by the voters. So, again, I'm going way on the deep end here, I'm flying in the middle of a public meeting, I don't wanna create a problem. But these are the thought process that I wanna evaluate, is this fee that you're charging, what service are you charging it for?
You jump right into the fee schedule?
Well,
Fee
that's
schedule
not
won't
gonna tell
matter.
you what it is. It's
Yeah.
Right.
But you see my problem, is
It's 50% of our building,
So a $60
Correct.
building permit, 30 of it goes to fire suppression, 30 goes to, the whatever. So,
I think this really drives to the heart of this whole meeting. What were we planning for? What is our direction? What is the real cost of a water suppression system? Or the plans for a second water suppression system, where?
there's nothing in writing anywhere for
There's-
that, right, exactly.
No,
Yeah.
no.
to your point, it should be in a capital improvements plan.
Exactly.
So you know.
I mean, if we knew the answer to some of these questions, it'd be a simple solution to where to move that fund.
Well, we still have the question of how do you raise the revenue? Because your capital improvements plan says what expense I have to have. The next part of the equation is how do I pay for that?
Right.
Which is kind of a question we've just been talking about, which is
I mean,
But-
I mean, to your point very early on, all this stuff is related.
Yeah.
You know, it's not just, you know,
yeah. So I don't like to get too deep into this because we can
Right,
go down rabbit
right,
hole, whatever. But I think this is good conversation of
yes.
things to think about, talking about. Let's talk about cemeteries though. So cemeteries, you have 3 cemetery funds. The reason I'm going to guess that you have 3 cemetery funds, I don't remember when it was 15 years ago, 20 years ago, I remember, state of Michigan passed legislation that talked about perpetual care funds. And perpetual care funds were intended to make sure that, this goes almost exactly what we were just talking about with fire suppression, a little bit different, that you were capturing enough money so that you can have money to make sure that the cemetery is cared for forever, perpetual care. And the reason they did this was because we had private cemeteries that were going out of business, and then you had nobody that could protect that. And so you can now set up perpetual care funds, either if you're private or if you're local government, to do this. And there's a big kick, if I remember because clerks were really the ones that were getting information on this and pushing this across the state through their association, that we need to set up these perpetual care funds, we need to set up perpetual care funds. And so I see a lot of communities that set up these funds as perpetual care funds. In reality, if you look at however that, no offense to clerks.
No, I didn't
Yeah.
want a perpetual care fund. I fought
Yeah.
that, but
So if you look at most communities never set up technically as perpetual care funds, and the idea was if you sell a cemetery lot, you add on 10% to that fee, and then that money is then set aside in a separate fund, and then that money continues to grow, and then sometime in the future, if you need it, you can pay for the cemetery. My opinion on it is, again, this is more funds than you need, more complexity, and 2, most importantly, you're not a private company, you're never gonna go away, right? You guys have to maintain that fund. One way or the other, you will find tax revenue to pay for that. And so you don't need a separate fund to do that.
well, I can combine all 3 of those into one fund.
No?
I mean, we
We
have,
have cemeteries into the general.
right,
Yeah,
one,
Yes,
one,
yes.
one.
Yes, yes,
Right.
yes.
Thank
Three
you.
funds under,
But-
because this is a normal service that we provide.
Great, and you're gonna pay for it one way or the other.
So from my understanding, and I haven't spent time digging into this yet, but I'm a little preoccupied lately, but I was, because it was brought to my attention at MTA too, that once you have a perpetual care separate checking account,
If
it's
it-
very hard to close it.
If it is professional care.
It is. And that's how, it's the
It is,
name
that's
on
how
the
they
account
set
that
up.
was set up.
So, yeah, go back to the ordinances, because I read a couple ordinances and people said they were perpetual care, when I read them, you know, maybe that's something, I'm not saying that's
So
the
is
case.
it, would it be in the minutes that I have to find that?
You should have an
Because
ordinance or
our
something.
minutes are very,
written.
that's why, should be an ordinance or a resolution?
Should be an ordinance.
And if you can't find it, then you
we're good
document
to
it.
go.
So what happens if I close the account and I shouldn't have?
so the first thing is talk before you do it, because you don't wanna find it in your audit, right? Because that's where the auditor should look at it, see if you're not recording money in the right fund. Frankly, not to pick your auditor should have brought some of these things to your guys' attention too,
Oh, I
right?
agree, yeah.
So, but this is an example of that, call your auditor first and say, okay, this is what I've done. We have these 3 separate funds, they're currently restricted. We believe they were set up with the idea of perpetual care. We've looked through all of our documentation, we can't find any documentation that says these are perpetual care funds. I believe that they officially under, I forget the act, are probably not identified as perpetual care funds. I wanna merge those back in the general fund. And, if the auditor says fine, you're good. If the auditor says no.
So I gotta get that writing from them.
Yeah, I mean,
No, we just, I think maybe we talk about it in board meeting.
but,
Oh, yeah, they should,
because,
okay.
and then once they sign off and you move it in, the next year, it doesn't matter anymore. Right, because once that 1 year is audited and it's moved it in, nobody's ever gonna look back again,
Oh, okay.
right? So it just becomes a one-time issue. Okay, fire association
Feel a
fund.
slap on the wrist.
You guys are responsible for managing government money. Fire association fund, unless I know something, unless you guys know something I don't know, it's not government money. Shouldn't have one. You're not responsible for managing the money. You shouldn't, because now it goes back to fiduciary responsibility, right? What happens when they think they gave you $1,200 and you deposited $900, et cetera, et cetera, et cetera. So get rid of that. Equipment replacement fund. So you guys have an equipment replacement fund. The purpose of equipment replacement fund is normally, you have funds like, you have separate funds. So you have a water fund, you have a sewer fund, you have a cemetery fund, you have all these different funds, and you have one lawnmower, right? And you have a DPW person, and that DPW person goes out, spends an hour mowing the township hall lane, they go to the lagoon and sewer, they spend 3 hours mowing it there, and that's wear and tear on that piece of equipment, and eventually you're gonna have to replace that piece of equipment. Well, one of the things that we do in governments is we wanna make sure that the individual funds are being charged their fair of expenses, right? So I have a water fund, if I have a sewer fund, and I'm not charging the wear and tear on that piece of equipment, if I'm not charging that employee's time, et cetera, then that means my rates are being set too low to cover the full cost of providing water and sewer service, or whatever service that we're providing. And so the equipment fund is a mechanism to charge the water and sewer fund so that they have an expense and they pay on their wear and tear on that piece of equipment. And then when that piece of equipment gets replaced, instead of figuring out, okay, I'm gonna charge all 3 of these different funds a little bit, now I have a pot of money and then I can buy that piece of equipment.
That's for our fire department, that's for the equipment replacement
But you have a,
village goes.
no,
Oh,
you have a 403, which is,
403.
yeah, which is different than your fire equipment
Yeah.
village.
I
So-
forgot about that one, we don't use it that often.
Yeah, so most likely, equipment replacement funds are great tools, but you need to be using it as an equipment replacement fund. If you're not using it as a source to find revenue from these other funds, then, because right now, the only source of revenue you're getting on there is interest, and when you sell a piece of equipment. Well, eventually, that equipment replacement fund will run out of money, because you buy one piece of equipment and it's gone, And then what are you doing again? Well, now I'm just transferring money to the general fund, into the equipment replacement fund, which is if I just took it to the general fund to start with, I would have saved a lot of time and penny for that.
I'm just curious, because where did this money come from? Because when I tried to look at that money in the past, I thought it was money left over from a millage in the past, which can't technically then be spent.
But it's a 403, which tells me it's not special revenue. 402, sorry.
But was it moved there when it shouldn't have been?
I don't know, there were accounts created.
So you're saying
back
402
then.
shouldn't be moved to the general
So
fund?
Unless,
I don't remember how this.
This has been there since before I started.
Yeah.
But when I tried to find the money and backtrack where it was, I'm not certain that it wasn't moved into that fund when it maybe, I'm not sure that it was
Wait, wait.
there, I'm trying to.
go to the state's website, pull up the oldest audit we can get to is 2007. Pull that audit up and see if it's there. Yeah, and then you might be able to look back at it. But
I thought that was when the fire department sold those equipment.
my guess is that's what it is. If the fire department had,
Wouldn't there be receipts for selling that equipment?
Or two, it just says cost recovery interest, transfers in miscellaneous and equipment.
because normally it's that
Okay,
cost
fine.
recovery
I'll
concept.
look up the money, yeah, we don't usually get much of that.
No, just state, and it usually says take it out of the 402 fund.
Yeah. But if it's just fire equipment, you already have a fire millage and it wasn't created separately, then, you know, you can figure out where, you can move it into the general fund, you can move it into the fire equipment fund if that's what the purpose of it. But like I said, I mean, like you said, cost recovery, that's what these funds are for, is cost recovery. Recovering costs from other funds. And if you're not recovering costs from other funds, then, I'm gonna guess that that's what it was. If I was at the fire department at one point, sold a piece of equipment, and they said, well, I wanna keep that money. And then,
When Dave got rid of it.
yeah, and if that's the case, then I'll probably move it in the quick. I don't know, I still talk to your auditor on that, because I don't know if you wanna move that in general fund and put it as a sign. Or if you wanna move it in your quick, I've talked to the auditor on that. Okay, ARPA, so you guys still have you spent any of your ARPA money?
Yes,
Okay.
spent like, what, 13,000?
Okay, so this is the deal with ARPA. I've been telling everybody this for a long time. So ARPA, when you have ARPA money, you can spend ARPA money on 4 eligible uses. One is premium payment for essential workers. 2 is infrastructure, which is water, sewer, and broadband only. 3 is impacts due to COVID. And 4 is revenue loss. Now the nice thing is that the bad thing is when ARPA was first passed, a lot of our local governments, especially our small local units of government, couldn't spend any money on the first 3. So they were gonna have to lose the money, they're gonna give all their money back. Since the originally came out, they changed the rule, and they basically now say any local government can have up to $10 million in revenue loss. So you guys obviously don't get $10 million, you got a couple or thousand or whatever you have, so you can use all your money on revenue loss. If you use money on revenue loss, the nice thing about revenue loss is, unlike the first 3 categories, which has some very, very limited restrictions on how you can spend the money, get very complicated, under revenue loss, you can spend it on any government service that you normally spend to benefit your constituents. So in other words, any expense other than debt, which you guys don't have, that's in your general fund now, you can say, that's what I'm gonna spend the money on. Why is that important to consider? Well, one, you have until December 31st of this year to spend that money. And when I say, let me clarify that, that's not correct. You have until December 31st to obligate these funds. And obligate, there's some nuances to this, but in general, obligate means that you've entered into contract to spend the money. So it's not good enough to say, well, I'm gonna spend it on buying a well for the fire department, because we're talking about that, right? You would have to have entered into a contract with a vendor to install a well for the fire department. Now, they have until 2026 to get it done, December 26th to get it done. The advantage, though, of spending it under revenue loss is it ensures that you spend the money. I'm afraid there's gonna be a lot of local governments in the state of Michigan that have not spent the money, are still trying to figure out how to spend the money. the election's gonna come, there's gonna be changing boards, all kinds of things are gonna happen. They're not gonna spend the money, they're gonna have to give the money back. And so the easiest thing to do is to identify any expenditure that is in your guys', that you guys set, that you've actually spent money on, and say, that's what I'm spending the money on. So what the impact of that is that if, for example, and the easiest thing I tell people to spend money on is spend it on the salaries. Because it's easy to print off a payroll register and say we spend it on salaries, and you start from today's date, and you go backwards to the beginning of COVID until you get your $200,000. Or if you have one or two other large expenditures that you can just pick and easy, because you have to document something. You have to show some cancel checks and some invoices for whatever that expense is, so you can document it in your files if you ever need to use it. And what the impact of that is because you've already spent the money already went out the door, and so somewhere along the line you have some revenues to cover that. The impact of it is it's going to take your fund balance of whatever it is now, and it's going to increase it by, if you have $200,000 left, it's going to increase it by $200,000. Because you can't recognize the revenue until you have a corresponding expenditure. So when you say employee salaries is my expenditure, now I can recognize it in revenue, now I can record it in my books. And if I record it in my books, now I'm done with state, or with federal reporting.
You don't have $200,000.
Whatever you have.
Whatever.
Whatever you have left.
In wages,
Yeah.
Yeah, if we,
But you can use any expenditure.
any expense.
Any expenditure that you want to add up. You can add 1 or 2, 3 or 4 or 5. But my point is to find the least amount you can. Instead of documenting, a lot of communities, I have 5,000 here, I have 10,000 here, I have 15,000 there. It gets too confusing. But make sure it's expenditures in your general fund. Because if you spend the money out of the fire fund as an example, then you have to record the revenue of the fire fund. So wherever the money comes out. So the advantage of it is now I get to record it. Now it's a revenue on my books. I do one last report. I don't have to worry about giving the money back to the feds. I got to record the money, and I'm done with it. Now, the question becomes, is that, well, you have two choices. One is I just let it absorb into the general fund, and my general fund is just, it's happier, it's bigger, and I don't really worry about it. I just have a bigger general fund, and now when I get to my next year's budget, I know it's a little bit healthier, I can be a little bit more aggressive in expenditures or whatever. Or two, some communities, and especially since you've already did a process of getting some citizen input, some communities still want to identify that as a pot, because they want to be transparent to the public, right? And the public want to know, how did I spend ARPA money? So the other thing you can do is that, so you have your board approve that we're going to use this money under revenue loss, and this is expenditure I'm going to use, the board approves that. And the next action the board takes is that I'm going to, whatever the dollar amount is, say it's $200,000 again, you're gonna have a separate action that says, I'm going to assign $200,000 for future community improvements, whatever you want to call it. Just don't call it ARPA, because it's not ARPA money anymore, right? Because you've laundered the money, right? You took the money that's ARPA money, you put it in your general fund, and then now it can come out. So don't call it ARPA, because we don't want to confuse people that this is still ARPA money, because we don't want the feds looking at it. So, but you can name any name you want, and now I have $200,000 that's assigned, and now instead I have to worry about obligating this by the end of this year, spending it by 2026, now you have 3, 4, 5, 10 years to figure out how you guys want to spend the money.
So if you do that though, do you have to go back into your bank recs and change that money? Like if we're now saying, do you know what I mean? Like if we're now saying we spent the ARPA money on payroll in 2021, we have to go back to 2020.
No. Because it's when you recognize the expenditure. So once you recognize the expenditure and you recognize an expense, you can use the, yeah. So in essence, no. Yeah, in essence, you're gonna record that as revenue right now. You're just using that documentation for your revenue loss. It's not really revenue loss, right? It's just the allowance for it. Yes, ma'am.
So revenue loss back to 2020?
So it's the period of performance, which is March, is that when COVID started?
Yes.
Yeah, so it's March of 2020 until December 31st, 2024.
So salaries could take up that chunk because you're talking all your salaries.
No,
But
the
your
board
salaries,
cannot take that money.
you're not taking the money.
No, the board, we can't, okay, do you remember Greenwood, or,
No, they tried to get us some bonus.
they tried to
Yes,
give
it's
themselves
different.
bonuses,
But
completely different.
Okay.
You're just recovering salaries already
Correct.
paid.
Yeah.
Correct.
So board salaries can be
Yes.
included, well then,
Yeah, your 200,000 is
Right, you just can't
gone.
get a bonus.
we just
Yeah.
can't call it a
And
bonus.
if we don't cover it, we throw the sign in, and that was
So
another.
you said March 2020 all the way till today?
No,
To
and- and
December
it-
31st of this
No,
year.
for the dates that count that you can put that money against for COVID.
But yes.
2024.
To technically, because your next report that you're gonna fill out is gonna be, April of next year.
Right.
So basically, you could take, because you don't have to fill that report out until, and your fiscal year, your guys are March fiscal year. So, what's that? Yeah. So realistically, you could take, you don't need to do it today, you can do it anytime before December. But I'm just more, I don't wanna mess with it, I wanna get it done and
What I
recorded.
was gonna say, we've got enough in.
Yeah,
we
do it
can-
from
we
today
can- we can
backwards.
Make that up
Okay.
before.
And we have to
Yes.
document those
Yes.
wages, right?
Yes, yep, so you want,
Print out.
yeah, so you print out a payroll register, and then you put some, the corresponding bank statements with that, so that, that was
That
paid.
makes it real simple.
Makes it real simple. Yeah. Makes a lot of sense.
I think, I mean, we discussed before, I think we should still set it.
I think you just earned your keep for the entire evening.
Good. The other thing I'll have to do is keep in mind is that you have a separate fund, so you're gonna have to transfer that money out of that fund into the general fund. So, because you wanna record that money, and so there's, I forget the journal entries you have to do for that, but it adds a little bit of complexity to that.
We just wanna take the ARPA label off of it.
But yeah,
Once it's transferred.
yeah,
Just transfer it to the general.
yeah, because the general fund is gonna be recorded again as a revenue in the federal grant, other federal grants. Okay,
Yep.
so the last one is, we look at your guys' budget, and we look at page, I can't see the page number, so I'm gonna guess page 4. So it's the one that's got just a little bit of rating at the top. You got that? You want another one?
Thanks, that one. It's on the very bottom of my stick.
Oh, there you go. Okay. So, actually, let's look at page 5, because it's the same information, but it's easier because it's all on one page.
The cemetery trust
The
fund.
set, yes, ma'am.
Thank you.
So, if we look at the highlighted numbers, so the first 102 is your revenues, and you'll notice that ties to the 102 just above it, so 3 lines above it, right? So that's your revenues that you're coming in, and your expenditures also say 102. So that means that you guys think, and this is the same in the last page before, is for your general fund. But what you're saying is that my revenues and my expenditures are gonna be exactly the same. Well, that's probably not gonna happen. Could, right? If this is one fund, it was one off, it probably could. But what that tells me, and if we look back at this last page, page 4, we see the same thing for the general fund. We have $447,000 in revenues, and we have $447,000 in expenditures. Now, I've seen this quite a bit, and it goes to the impression that sometimes governments are left with is that I can't have deficit spending, which means that if I bring in this much money, I have to spend this much money. Well, as we talked away at the beginning, that's what fund balance is for. If you have a difference, it gets added to fund balance. And you should know that. So if you think you're gonna be exactly even, then that's fine. But the reality is, if you really dig into deep into each of these numbers and do an independent analysis by the number by itself, each line item, each account number, the likelihood of you coming up to the end and having exactly the same amount of revenues that you brought in is not gonna happen, right? There's always gonna be some difference. You're either gonna estimate that you're gonna bring in more money than you're gonna spend, or you're gonna estimate you're gonna spend less money than you spend. And if you're trying to make them match, then you're artificially adjusting the numbers as opposed to doing true analysis of what you think your revenues and expenditures are gonna be. And so now, how do I make a more, and I don't know if I got.
I got ripped up and down because my first balance, or my first budget wasn't balanced.
And a lot of, don't feel bad for them,
Yeah.
because that's one of these things that happens, becomes conventional wisdom, and it gets married on and on and on. But in reality, if you step back and say, well, how can I make analysis of saying, you know what, I need to cut my expenditures a little bit more because, you know, I think I'm gonna be $50,000 over. We know that we need to grow our fund balance. How can you make, all of that stuff we talked about early on, how can you make any of those analytical decisions if your numbers show that they match? Because now you don't, I can't tell you, are your revenues overestimated or are your expenditures overestimated? Which one? You know, and that's probably most likely, right?
It is, because that's how we, when I first started, that's what they told us to do.
Fill
To do the budget, they would give us a sheet for the
Yeah.
committees and say, put down what you think you're gonna spend for the year. But then we were told to put down exactly what we had in the balances.
Yeah.
Right.
So otherwise, they would take the money from us in the general fund here. So that's why that's that way in all those funds. We've always written it down in the past exactly.
So these numbers don't have to match.
They should not.
They shouldn't match. It should be
Cool.
true,
That's
true
cool.
estimate.
They should be true estimates, yeah.
Makes
Go
no
up every
sense.
night. Yeah. That's best. I mean, again, they're not gonna be perfect. Because like state revenue sharing, you go to the state's website and you can pull up your estimates for what your revenues are gonna be. But that's their estimate of how much sales tax they're gonna collect. Who knows what's, I mean, we have a presidential election coming up. Can anybody tell me what's gonna happen in our economy come, November 5th or whatever the day the election is? Right, we don't know. So they're guessing, but one way or the other, whatever that number is, it's gonna be different than what the estimate is. Now, your job is when you estimate for revenue sharing as an example, is you take the data from the state and you just have to be careful with it because your fiscal year is different than their fiscal year, so you have to take 2 different years of numbers and push them together because you get the money every month. And then you figure out the estimate and you figure it out and says, okay, based upon their data, it says it's gonna be $358,000. You know what? I look at my trends, we've been bringing a little bit more than that, maybe I'm gonna go to 360. I never do that. I'm conservative. So I'm gonna go back and say, well, they say 358, I look at the last year, I'm gonna make it 345, or 340. I'm gonna make it somewhere lower because you just never know. Now again, you don't wanna be too extreme with that type of stuff, but that's an example of why if it's 345 and it comes out to be 348, I mean, whatever the number, nothing's ever gonna match exactly, but it should be close. And it should be good reasoning, logic reasoning. Yes, sir.
When budgeting, and this applies to any of the funds, it's not uncommon in business budgeting, okay, we're crystal balling stuff, and here's a miscellaneous account, it's a fudge factor that we're putting in,
I don't like those.
so that it shouldn't exist at all.
I don't think it should exist at all. Because that to me becomes a crutch for weak budgeting. I think you should use the best data that you have, and I think you should come up with the best estimate you have. And because we're supposed to be monitoring our budget, when stuff starts to come in a little bit different, then now you as a board have to make an executive decision of what you're gonna do. As opposed to if you have this crutch fund, then it almost becomes like, oh yeah, we're a little bit over here, we're just gonna take it from here. But that's not should be your decision-making process. Your decision-making process shouldn't be that I have a slush fund, I can take it out of there. It should be, well, what do we want to do? Because the decision shouldn't be made in a vacuum. You gotta take into account everything else you're making decisions on and everything else that rolls into that, because there may be something else that happened over here you didn't expect as well. And so I think that it causes, I like active, proactive decision making. So I think that causes you to have more active decision making in the process by not having a crutch. I was gonna make another comment I thought about. I can't remember it. I don't know. It might come to me on the way home.
It'll hit you when you get the catalog.
Exactly. Yeah.
Turn around, come back.
So with eliminating the fire association fund, is there anything that we have to do specially for that you are aware of? Like if we can't be managing their money and I wanna just turn their money over to them and tell them to go start their own organization, because I can't donate as the township, right? I mean, so So how do I give them that money?
And there's money in Michigan class for them.
Yes.
So, that's a great question, I don't know if I know the answer to it either. I would say definitely talk to the auditor. My assumption is that you should have had the money in the first place, so you
Exactly.
illegally should have had it.
Then it's ours.
No, yeah. Cause you
They
should,
allowed us to take it, and
Yeah.
now we can't make a donation.
well, but you're not making
You're
a
not making
donation,
a donation.
you're fixing,
We're,
Okay, I
know.
know problem
we're,
that was created back in
Right.
early 2000. And I can remember part of it because I was in the fire meeting when they were talking about it. The fire association used to be part of the National Fire Corps. I don't know why they decided that they were going to leave that national group, because that was illegal.
There was probably
That was
things
legal,
associated
but
with
there was
being in
something,
it.
I
Yeah.
don't remember why.
they probably didn't wanna start their own 901c3,
And I'm not sure,
They had one, but it expired.
so now they're gonna have to create,
I'm not sure if what happened when they decided to be fire corps, if the board said, well, you leave fire corps, we'll take the money and we'll make your own fund for you. You know, I'm not sure how that, I just remember that they left the national group, which was a 501c3 or whatever.
Yeah, but it wasn't our own individual for our fire association, it was a national one. So we never
We
had
were-
our own,
we were-
and it should have its own here, right?
And they had their own checking account and everything.
Yeah,
Right,
they were their
but
own
They
chapter.
were under that umbrella.
Yeah, they were a chapter, but they didn't have their own number. 'Cause I got the paperwork from the original fire corps. in the
Something
office.
like that, of how they,
this is not unusual, I've seen a number of other jurisdictions do the same thing, because if you think about it, you're sitting in a meeting, you're like, hey, we got this money, you know, yeah, we can just manage and keep it for you, it's for the fire department, fire departments are, why can't we just keep the money? So it's a logical jump, because these are the problems with local, we go back to complexity of local government. The number one reason local governments get themselves in trouble is because they try to do the right thing. But they just don't know the legality of the right thing, because it's too complex for somebody to know everything.
Right.
So the decision-making wasn't bad, it just unfortunately wasn't the best decision-making, because you didn't know all the facts. So, no big deal, now we identify it, we fix it, we move on to the next thing. And that's the thing that, in all these types of things, I'm a big believer in just simply small incremental improvements. You guys can't fix everything that's occurred in this jurisdiction for the last 150 years. You can only try to do a little bit better every
one thing
single
at
day.
a time, and then
Yep.
we can, it
Yep.
just builds.
It just builds,
Yeah.
yep. You know better, you do better. And don't get overwhelmed with it, right? Because you don't look at this thing, oh my goodness, everything's, you know, no. We identify the low hanging fruit, fix the low hanging fruit, and then we move on to the next thing. So, yeah,
Well, thank you.
I think that's it. Thank you. Good, I hope you guys liked it. Good, thank you for the opportunity.
any more public comment? Okay.
You didn't ask if there were any more So, I do have one little question, and, so back before you said something about if you are having difficulties and things, and that you can hire a separate firm outside to do this like big recs.
Yep.
Outside of your auditor, for questions and that. Is that something that most accounting offices will do if you call and like, or do they wanna do it like at a one-time thing, or do
So
they
they're-
wanna do it on a
We can
monthly
hire it.
basis?
We can hire them to do payroll and things like that.
Yeah.
Well, I don't wanna hire somebody currently like for that, but because we have, to get these funds done right and straightened out right, and also because we have not balanced since the last time the auditor was here on our general fund. And I've been digging, and Rose and I have looked at some of it together to try to find money that
We've got
is
one,
not balancing.
we've got one that we know of for sure.
Right, so I would personally rather at this point have somebody come in and make those adjustments for us, so we know they're done right. And also to find the error that we have, and if we shouldn't use our auditor, we shouldn't definitely use our previous auditor who made
No.
more problems than we started with. So I just wanna know what the best way to find somebody or your recommendation for that.
So, my recommendation first would be, just talk with your auditor. I would still stick with that one first.
Our new auditor.
Your new auditor, see what their comfort level is in terms of what your questions are. If they don't feel like they're imparting their independence, then they may be able to help you, and frankly, it's gonna be less expensive. The second option would be, now this goes through this shameless plug, our firm
I
has
know, that does.
outsourced accounting. That's what, that area does every single day, exactly what you're talking about. But you don't have to go just with us. There are basically two different types of firms that you can focus on to help you with that. One is gonna be just a general accounting firm, one that tends to just do more small business, bookkeeping, those types of things. They might be able to help you, they're gonna be way less expensive.
But I would rather have somebody familiar with the SNA.
But the problem is they're not gonna understand government accounting. Some of these questions like, well, can we take the cemetery funds and merge them
Right,
together?
but you,
That's gonna be over there. So the second option then is to find an auditing firm, and use the auditing firm, ask them, so somebody else auditing firm. So people, there's probably 3 or 4 other firms that do auditing, but also do outsourced accounting as well. There's probably more than that. I'm sure there's more than that.
We don't have to use them, but we can.
right, we can hire anybody but the
Accounting
current.
for any
Yes,
company.
from
It doesn't
any
have to
audit
be
firm.
Right, I just
Yeah.
wanted to see.
Right, okay.
Yeah. And then to your question, there's 2 different ways you can do it. One is you can say, I have a specific project, I want to quote for this specific thing.
Right.
And then 2, you can do it more open-ended, which says, okay, it's more just time and materials, and as we need you, you build into the budget. And then as you need those resources, you're calling, the expert to help you through that. So they can help with, audit prep's coming up, hey, I want to make sure we're good to go on that.
Right.
They can help with some of these one-off questions, and that just becomes another resource that you have available.
It'd be nice to have somebody on call, but it's just, I think it's mainly because we did make some big changes, like we tried to I did set up a sweep account.
Yes.
And so with that, our auditor tried to advise
I
her
tried.
how to set it up, and it was all set up wrong, so we're trying to backtrack and find things and move them, and it's been a nightmare, and so I think that's part of the problem. And I think we've got most of those cleared out of there, but again, I'd rather just have somebody else, especially before the audit, come in and make sure all that's correct.
The nice thing about our firm, to shamelessly plug, is that, so we have 2 people specifically that I think of the sweep account. We have Heather and Angie. Both of them, just like me, worked at the local government level.
Right.
So the thing that, not to pick on my audit partners, but our audit partners are good at knowing GASB and audit stuff, and they probably, like some of these general questions that we talked about here, they're perfectly fine for it. But things like managing a sweep account, they can probably help, but they've not done it, right? So that's one of the things, I think one thing that distinguishes our firm from other firms is that we hire people that work at the local level. So both Angie and Heather are not CPAs or accountants by training, but they've worked at the local level as finance directors or deputy finance directors. So, again, shameless plug.
I was not here or I would have plugged you guys at the last board meeting, and I would have hoped that I would have persuaded us to go that way, but I unfortunately couldn't be here, so.
Well, but in the accounting firm,
Yeah.
I mean, this is the nice thing, keep in mind is that, it's okay to use one firm for the
Right.
audit, another firm for accounting services, you should be doing that. And, personally, we like to do the accounting services more than we do the audit.
Oh,
And the reason is, I'll tell you why, is that our realization is higher on outsourced accounting than its audits. Audits, it's interesting, I didn't know this until I come to the firm, is that, audits, because the municipal market can't charge what it costs to get full cost recovery. And so our industry has had to lower the value of the audits. Now you compare it to schools, so we do school audits and local government audits. Our school section is way, I don't want to call it profitable, but have a higher realization because the school market allows them to charge more. It's just the market forces. Now that's all changing and prices are going crazy right now. But the outsourced accounting side, we get higher realization than we do on the audit side. So that's just why we like to do that more. So inside baseball.
awesome.
So appreciate it. Cool. Thank you.
Thank you.